Hello and welcome to Indian Markets Unveiled, a daily market podcast where we take you through all that's happening in the world of stock market, the global market, the domestic market, the bullion market, the commodity market, the energy pack, and all that you should know in order to start your trading session. So let's get started with the global market as always and try and understand how are the global cues panning out for the domestic markets. The global market seems to be in a downtrend, and don't forget that this is a truncated week for the domestic market. If we have a look at the Asian and the US markets, well, the US futures are higher after cash market ended lower on the Friday session. The US market ended lower on Friday, wherein Nasdaq, S&P, and Dow Jones were trading lower. Almost 300 points, as we see Dow Jones was trading lower and closed with a downtrend of around 300 points. S&P closed with a downtrend of around 53 points, and Nasdaq, the technology heavy index, also closed in red signals with a downtrend of around 200 points. So clearly weakness coming in from the US markets. All 11 S&P 500 indices ended lower, wherein declines led by the technology and financial spaces. The US market ended the week on a lower side, with S&P 500 falling around 2.5% and Nasdaq falling around 3%. American Express falls around 5.5% despite reporting better than estimate Q3 earnings. So as we see, just like domestic markets, the global markets are also coming up with their quarterly earnings, and the impact of the earning is seen in the stock specific action as well. Talking about the bond yield, US 10-year yield retreats after hitting 5% on Fed Chair Powell's hawkish message, which was a very important one, as we all were considering it as an economic indicative action. Talking about the European markets, on the Friday session, the European markets ended lower for the fourth straight session, where key indices were falling up to around 1.5%. Now let's take a look at what happened with the Asian market to start with the morning session today. The Asian market started the day also in the downtrends, where we see red signals in the early trade, as Nikkei was falling around 0.5% and Shanghai also in red. The Asia market extended sell-off after Powell's comment, and Japan inflation slowdown was another economic indicative action which one needs to consider. The Hong Kong markets did fall more than 123 points. The Kospi also did see red signals. Nikkei, of course, 200 points downtrend. And if we have a look at the Gift Nifty, the start of Gift Nifty was flat, which is indicating a muted start for the Indian markets. So clearly, the global sentiments are weak, and the sentiments might have an eventual impact on the domestic markets when the markets open up today. Talking about the energy pack, the crude prices are easing to $91 a barrel on positive diplomatic developments in West Asia crisis. Bullion market also is witnessing signs of weakness, as gold prices are falling to $1,966 on rising treasury yield, and dollar index is steady at 106 mark. So this is how the global sentiments look like, and on the face of it, we see that the global markets are witnessing weakness, which will be a concern for the domestic markets. And of course, it's a truncated week, as Tuesday's session will be a holiday for Indian markets. So consider all of these factors from the global markets. Let us now understand how the market sentiments could look like in the session today to start the week with, where we will start understanding with the closing of Friday and then eventually get to the market opening sentiments for today. The market remained range-bound with a negative bias throughout the session on 20th October, which was Friday, and also closed 1% down for the week, though the Nifty managed to hold 19,500 to 19,480 mark, which was the crucial support area. The sentiment looks weak, and if the index breaks the low of last week, that is 19,480, then 19,300 can't be ruled out. But in case of a rebound, the 19,600 to 19,800 will be the hurdle on the higher side. Talking about Sensex, Sensex fell around 232 points to close at around 65,398, while the Nifty slipped around 82 points to close at 19,543, forming a doji candlestick pattern on the daily charts and a long bearish candlestick pattern on the weekly scale. Normally, the formation of such patterns after reasonable decline or at the support alerts bulls for the comeback from the lows. But let's see what happens with the markets and these sentiments, because results season is on the way. At the same time, there are global factors also which are coming in, and of course, technical parameters are something which one needs to consider. In the short term, the trend of Nifty remains negative because there are concerns and a lot of volatility has come up, and a slight, where we can say a slide below the immediate support of 19,480 could drag Nifty towards another important support of 19,350 levels in the near term. Immediate resistance is placed somewhere around 19,650. Talking about the broader markets were also under pressure on the weak breath. The Nifty mid-cap and the small-cap indices were down during the Friday session, where we did see volatility. Of course, stock-specific action was seen, but the indexes were not performing. Let's talk about the key support and resistance levels for both Nifty and Bank Nifty. While for Nifty, the support may be at 19,523 level, followed by 19,505 and 19,477. Whereas on the higher side, 19,580 can be an immediate resistance, followed by 19,598 and 19,627. Talking about Bank Nifty, on the Friday session, which was 20th of October, the Bank Nifty opened lower but managed to cut down significant losses and closed off the day's low at 43,723, falling around 31 points. We can say that the index has formed a bullish candlestick pattern with a longer upper shadow on the daily charts by taking support at the previous day's low. As we also see that the result season is up and kick-started completely, let us take a look at what are the important numbers which will come in during the market hours today. Torrent Pharma, PNB Housing Finance, Mahindra Logistics, Mahindra Holidays and Resorts, Alok Industries are the few numbers which will be posted. Apart from that, there is a long list of cash companies also which will post its numbers, but these are the few which one needs to observe. Taking a look at the stock-specific news, these are all the news which came in after the Friday market closing. And since Friday market closing to here, what all important news are worth a look in, be present here. Starting with ICICI Bank, India's second largest private sector lender, has recorded a massive 36% year-on-year growth in standalone profit at 10,261 crore for the quarter ended September FY24, driven by a sharp fall in provisions, while asset quality improved on a sequential basis. Well, the net interest income for the quarter was at 18,308 crore, increased by 24% over a year ago period, with net interest margin rising around 22 basis points at 4.5%. The next stock in the list is Kotak Mahindra Bank. The private sector lender has recorded a 24% year-on-year growth in standalone profit at 3,191 crore, with operating profit growing around 29% at 4,610 crore, and improvement in asset quality numbers as well. Net interest income increased by 23% to 6,297 crore, with the net interest margin expansion of 7 basis points. So clearly, the banks in fact have started coming in with the numbers. And as we see, ICICI Bank and Kotak Mahindra Bank, on the face of it, the numbers look really good. The next in the list is 197 Communications, as the company posted its number. And talking about the results, the mobile payment and financial services company Paytm operator has narrowed its net loss to 291 crore for the quarter ended September FY24 from the loss of rupees 571 crore in the same period last year. So on a year-on-year basis, we can say that the losses have narrowed. Revenue for the quarter was seen at 2,519 crore, which was a growth of 32% on a year-on-year basis, driven by increase in gross merchandise value, merchant subscription revenues, and growth of loans distributed through the platform. The next on the list is Ipca Laboratories, as the manufacturing facility at Ratlam, Madhya Pradesh, has received establishment inspection report from the US Food and Drug Administration, US FDA, classifying it as voluntary action indicated. So a news-based impact which might be seen on this stock. RBL Bank is next in the list, as the private sector lender recorded better than expected earnings for the July to September period of FY24, with standalone profit growing 46% on a year-on-year basis to 294 crore, despite sharply higher provisions led by tax write-back. Net interest income during the quarter increased by 26% on a year-on-year basis at 1,475 crore. Talking about Yes Bank, the private sector lender has reported a net profit of 225 crore for quarter ended September FY24, rising sharply at 47% on a year-on-year basis with a fall in provisions and higher other income. Net interest income declined 3% on a year-on-year basis to 1,925 crore, Net interest margin improved 39 basis points to 4.8% during the quarter. And last but not the least, the JSW Group, JSW Energy, will be in focus as the group company has registered an 82% year-on-year growth in consolidated profit at 850 crore for the quarter ended September FY24, driven by robust contribution from the acquired renewable energy portfolio, merchant sales, and hydro chewing up impact. Revenue from operations grew by around 37% on a year-on-year basis at 3,259 crore for the quarter. And now let's take a look at the FIs and DIs data. Well, the foreign institutional investors bought shares worth rupees 456 crore, while the domestic institutional investors purchased shares worth rupees 9 crore, to be precise, 8.53 crore worth of stocks on October 20th. So clearly the FIs are buying shares. However, a small number of buying, maybe we can say the quantum was very small for DIs, but the purchase figure has come in for DIs as well. So a good sentiment from FIs and DIs as the shares buying. We were constantly saying FIs selling, but this time the figure has come of buying of around 456 crore. So with this, we come to the wrap of Indian Markets Unveiled for today's session. To sum it up, one can say that there's a lot of event and trigger along with economic indicative action happening in the markets. The results season has picked up and there's a lot of impact we see of the results in the markets too. The markets are volatile, and in this volatility, one needs to consider a lot of observation and research while they take any decisions. So irrespective of any market condition, research is definitely the backbone of successful portfolio creation. Well, wealth creation is the art that we understand, and we at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you're done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on the wealth building adventure together. Thank you so much and have a nice day.